We have had a deliciously green weekend with a lot of altcoins popping over the weekend. And this is the type of price action that can cause FOMO, panic, fear that you've missed out on the move, all those sorts of things. And this is your daily reminder that the fast move is designed to invoke those emotions in you. So in today's video, I'm going to talk about a few of the altcoins that have popped off, what to do, just remembering that once a move is formed, it needs to prove itself. So we're going to talk about what it takes to prove itself, whether or not this is potentially even just a false move, just some things for you guys to be aware of. And yeah, if you did miss the moves, where you can potentially get in for the next move that hopefully will follow during the week. So if that's the kind of content that you're into, be sure to smash that like button nice and early. We are going to spend some time on altcoins today. However, I'm just going to quickly go over Bitcoin because, as we know, Bitcoin does rule the crypto market. So we do need to know where we are in Bitcoin before we move on to onto anything else. So taking a very quick look at Bitcoin first, we can see here that on this entire move, since we hit the 30, what was this? This was the rejection at around 29,700. Our point of control at that point in time was at around the 26K. And when we zoom in on this current retracement, that's where we bounce at that point in time. Now, when we look at this price action here, we zoom in a little bit closer from the last false move to the high to the low there. The point of control is now sitting at around 26,500. So if we look at what's happened over the weekend, we can see here that a few liquidation levels have been taken out. So I'm going to get rid of the ones that are no longer relevant. But we did talk about this 7-day level that was at, around 27K. That was our area of interest, last week. That has been taken out now. And there was another level here that you can see has been wicked on 3 times at this point. That is at 27,200. And that was kind of a key area really for a lot of traders, because we had this resistance here, or this attempt here it's actually at the 800 EMA. This move here rejected the 800 EMA, and now this wick has, and we're currently at it again. So the 800 EMA on the 4-hour time frame for multiple attempts at it is acting as resistance currently. So if we want to see this move continue into the new week, we need to see Bitcoin break above the 800 EMA, but it doesn't need, it doesn't need to go straight up. We could have a retracement back to the point of control, which I mentioned was at about 26,570-ish, or any of these EMAs along the way. And then if we got a higher low there, we would expect continuation to the upside. So that's what we're looking for now, though. We want to clear that 800 EMA. And because we've rejected at it so many times, we want to not just clear it, but we want to clear it and then hold above it if we are to expect that continuation to the upside. Of the major liquidation levels that we have are currently above price, there's a 27, what is this one? 27,350 is an area to keep an eye on. That could wick into that, and that would still close around the 800 EMA. Following that, we have 27,600, and then we have the 28,300. These two levels here we've identified, a couple of weeks ago, and they've always kind of been on our radar. If we can get through all of that, then when I zoom out on this, you can see here that this is the next vector candle that's going to be of interest. And the thing about this price action is Bitcoin's in a Bitcoin's in a massive battle zone right now. But if it can break above this level here, which is the 27.8, it should be a fairly fast move back up to this area, which is going to be somewhere around just under the 30K region, because look how we've got this massive imbalance here. And if you've watched me for a while, I talk about imbalances a fair bit, where when you have a fast move down, it clears out the order books both sides. So that leaves the room for another fast move back up, which is what we saw here. And then eventually there's a consolidating period that comes in, and that rebalances the books. So all of this consolidation, whilst we've been bored for the last couple of weeks, that's basically done by design to rebalance the books whilst the market makers also accumulate their own positions. But if we can get through that level, there is still this imbalance up here. So I would say, excuse me, if we can break and hold above the 4-hour 800 EMA, or create a higher low, come down from here, create a higher low, maintain this structure here where we've got this low here, here's a higher low. If we create another one, then either of those two scenarios are going to be good areas, if you're not already long, to take a long position that, and in hopes that we do then break through and have this fast move once it gets into this zone. So I like what I'm seeing on Bitcoin, but I do have a caution about all of the weekend price action that I will cover once we've gotten through some other things. Now, Ethereum, if you were watching last week, I was talking about Ethereum in this channel here. And what I was saying to you was, these candles here were not bringing any volume. And we had two scenarios for this. Number one was it was either going to break down from the channel and we would come down into these lower liquidation levels, or at the time it was creating another higher low, which I pointed out to you guys. So that higher low was positive, but there was no volume coming in to push it back to the upside. And what I said to you last week was we now need to see the volume come in to push it through to prove to us that we're not going to break below that channel. So we can see here this vector candle was the attempt to do that. And that's positive, but the negative to it is, if I zoom in now, I am on the daily time frame, but on the daily time frame, that volume push did not break the 50 EMA. So that's not ideal. Like, we would have liked the volume to come through and break the EMA. And since then we've got, what is this? This is a day. So 3 days of fairly low volume. So again, this here is the 800 EMA for Ethereum as well, currently sitting at around $1,700. So really, like, in an ideal world, we want to get a daily close, like the daily candle that closes today or close tomorrow morning. We want to get that above the 800 EMA on both. Then we'll probably feel better about further upside. But, we have to keep in mind that this was the last push of the month to get a monthly candle close the way that, they wanted it to look. So let's have a look actually at Bitcoin's monthly candle close. How did it close? As basically nothing exciting. Let's have a look at Ethereum. So Ethereum closed as a hammer. So, that's what happens in the last day of the monthly candle close. They want you to believe something. So there will be that, extra attempt on the last day of the month. And look, September did close green, which was positive. But now we have this narrative that there's only been 2 Septembers, I think, that closed green, and then October that followed was a green month. So of course that's going to induce those emotions of like, oh, if September closed green, we must go up for October. There's no must. We mustn't do anything. It's just a game of liquidity. Where is the liquidity and what makes the most sense for the market maker to come and hunt next? So yeah, always keep in mind your liquidation levels and always be skeptical of price action on weekends, because if there is a weekend pump that's happening, then there's a reason. They're trying to get retail to do something, because retail will fall for it on a weekend because the market makers' markets are basically closed. So Ethereum's looking okay, but we need to either get a higher low that proves the move now, because the move's not proven, or we break above the 800 EMA and then come back for a retest. So now that you know where we are in both of those, we can have a look at some of the alts that have popped up. If we have a look at the Banter Bubbles today, we can see like we're basically green across the board. We've got some pretty big moves here on Sol, Render, GMX. There's a few here. So I want to talk about Sol in particular, but I am also going to have a look in the chat and see if there is anything in particular that you want me to cover, because, I don't know what you guys are interested in. So put some coins in the chat and I'll see what I can go through. But just know that I am a futures trader. So if your coins are things that are, just like super low cap rubbish coins, I'm not going to read them, because if there's no chart, I'm not interested. So let's have a look at Solana, because Solana had a crazy move this weekend actually, but I want to have a look here at the liquidation levels for Solana. So I'm just going to bring that up. here so we can see it together when it decides to load. Here we go. So we currently have a delta on Solana of 1 billion. 1 billion is quite large for an altcoin, really, that is not Bitcoin or Ethereum. So, and look at this imbalance here. We've got people shorting, there's 136. Total long liquidations is 975. So this goes to show that people are massively FOMOing into Sol right now. I do have a theory as to why, which, I will get to. But when we have a look at this, I always talk about things that rise and drop in 3 levels. And you can see on a heat map like this, or a liquidation heat map like this, it becomes a lot more obvious. So just to explain very, very quickly, these pink lines that you see below the price, pink and orange kind of colors, they are the liquidation levels of people who are long, meaning if price were to come back down, they're going to get liquidated. The blue and the green are liquidation levels of people who are short. So if price moves up, that's where the shorts are going to be liquidated. When you see bubbles like this, the bubble is a representation of how much money came in at that level. And this is kind of like, not to be rude or anything, but this is how you kind of, as a trader who trades liquidity, this is how you identify whether it's dumb money or smart money. And the way you do that is by assessing how large the circles are at each level. So you can see if this was a rise through here, just a rough estimation that this was a rise right here, you can't really see any super large circles, right? Then we go into consolidation, then there's another rise here, and the circles are still fairly small, but they're getting larger. Then we go into this consolidation, and on the last rise, look how massive the circles are. That is literally a story that is telling you that people jumped on at level 3. People jumped in long at level 3, which is the worst level to go long, because following level 3 is a reversal, right? So these are people who are potentially setting themselves up to be trapped right now. Why? Because they don't understand how the market moves, and they have FOMO'd in because they've seen a massive green candle, in a matter of a week. Solana's gone from $18 to $23, and they don't wait for these pullbacks. So the heat map is showing that right now, like, this is dumb retail money. And is that being set up on purpose? Maybe, but maybe not. So we have to be open to the market potentially remaining bullish next week when we open. I certainly am not calling this a fake move, but it's an unproven move. It's unproven until it retests when the traditional market opens, because not only do we have to wait to see how the market makers are going to play this move when the market opens, but we also have traditional markets that we have to be aware of. And when you have a look at S&P, now I know a lot of people like to, oops, that wasn't the right button, Anastasia. A lot of people like to say, oh, crypto's decoupled. That, sure, for the moment, but it always falls back into line eventually when there is some kind of major news that is just going to affect everything. Crypto is not immune forever. I can't wait, honestly, for the day that does happen. But at this point in time, it's not separate to, or it's not immune to what the rest of the global market is going to do if it decides to do something dramatic. And this is something we've been watching for on S&P for really more than a week now. We can see here that there is currently an M formation. The price is still in the process of moving down. It hasn't even started to create this retest, which I've covered on previous shows. We're looking for a retest of the 50 EMA at some point before a further drop to the downside. So, we've got S&P still just waiting a retest before there's a level 2 drop. NASDAQ is in the same situation as well, where we have the M formation that broke the trend line here. Let me just zoom in on that so you guys can see it. Broke the trend line here. And at this point in time, we've got a wick to the 50 EMA, but we need to see now we're going to get a further drop down to the downside on this one. And then you have 𝗥𝗂 as well, which is still on its way up to this area of interest, which we've also talked about before. It hasn't quite made it there yet, but we need to see what happens if 𝗥𝗂 can get back into this zone, which is at 107.3 to 110.6. So we're not out of the woods yet. like the rest of the markets are looking fairly bearish. And then you have to couple that with the fact that this is happening on a weekend. Why would they do it on a weekend? Maybe they're setting up for something else, because at the end of the day, if price is rising and you're buying or in general retail are buying, somebody has to be selling to you. So somebody has to be shorting. And why would they do that unless they're setting up for a really big position? So the way we know the difference is when we get back to normal market structure and we have some kind of retest. So with that in mind, the one thing I want you to be careful of is, when we have a look at Ethereum, Ethereum's done this big move here. And so naturally Solana follows. Why? Because everybody thinks that Solana is, what do they say it is? It could end Ethereum, or it's the next Ethereum. It's Ethereum's closest competitor. So if ETH starts to move, people are naturally going to want to, move to other things that do similar to ETH. Sol is its next biggest competitor. That's just what happens. By the way, if you ever want to trade narratives, which is a really good idea, but you don't actually want to study narratives, because I hate doing that. But one really good thing you can do, let me just bring up CoinMarketCap, but hang on, because I have to make sure it doesn't bring up my portfolio. So let me just bring it up on this computer and then I'll bring it across. 1 second. Yes, we're safe. Okay, so here we go. So here, so if you ever want to, like, just say you see something that moved massively and then you want to then go, okay, well, I've missed that move. What else is similar to that might move next? Find the thing that moved massively. So if I click on Solana, and then it has it, where is it? Down here. It will tell you here that there's like, where is it? It's moved now. Here we go, the tags. So you don't actually have to know, like, people talk about layer ones and like Web3 and this and that. You don't have to know all of that. You just come down here to the tags and find a tag that is similar to whatever that coin is doing. And then when you click on the tag, so let me just click on this one, for example, it brings up all the other coins that are similar. And so you can just come down here and go, okay, look, what's had the biggest 7-day move? And now, like, just say the 7-day move was to the upside. You want to see a 1-hour red to the downside, because that will tell you that, okay, this has had a massive move over the last 7 days. In the last hour, it's gone red. Maybe this thing's about to reverse. And then that's how you find your altcoin trades, and you don't actually have to know what the coins do. So anyway, that's how I do that. That saves a lot of time. So Solana's liquidation levels to the upside here at 23.4, 23.6, and 23.9. When I show you that on the heat map, has it decided to load? Yeah, we can see that those are these 3 big levels out here. But below price, on Solana, the biggest spike that we have out is at 22.5. So 22.5 is only going to be a retracement back to here. Let me put it in 22.515. Right. So for me, this will not be a deep enough of a retracement for me to want to get involved in Solana for the purpose of futures trading it. As an investment, I mean, we already should have invested in it, to be honest with you. But, for the purpose of futures trading it, I have to either see what it's going to do as it gets to these liquidation levels here. It may keep going. And if it keeps going and smashes right through them, it's just wrecking shorts left, right, and center. So you don't want to be trying to open shorts when the momentum is so strong to the upside. You have to look for that potential, like that signs of weakness at around these liquidation levels. And if we don't get them, if price keeps going on Solana and takes out all of these, then that's when you turn back to something like high block, and new liquidation levels will open up. And then obviously you adjust your chart according to that. So that's how you're going to get a potential reversal. But as far as a retracement, it's really only showing me that it might come back to 22.5 at this point in time, if this is going to be a sustained trend that continues into next week. And that's not enough of a pullback after, like, just for me personally, like you live your life. I'm not judging. But let me just measure this out. So after what? 24% move to the upside, it's only going to retrace back here to 22.5. I got better things to do. I'm not bothered with that. So let me just have a quick look at some things that you guys want to see in the chat. I do also, I'm not sure if you guys can see my list here clearly, but if there's anything on this list, these are the ones that have moved the most over the weekend. So let me know if you want to go through some of those. But let's see what I can see here. Oh, there's a lot that actually was on the list. Chainlink was one I just saw that's not on my list. So let me just bring that up. I don't want to be on OKX. I want to be on Binance Perps. Where are you? Binance, here we go. Damn. Well, actually link on a higher time frame. Guys, I spoke to you about this. If you watched the video where I taught you how to invest in coins for the long term, this was the coin that I used as an example. It was a Sunday show, I believe. There is a watch list at the bottom of this video. There is a watch list. Go into the description, have a, not a watch list, playlist, have a look. It says Annie's educational series or something. And I used this as the example where I talked about a bear market that went for more than a year and then a sideways accumulation period that lasted more than a year. And if we draw this out here, that's 462 days. And so that ticks the box. And I said, all you do then is you draw your support and your resistance of that long consolidation period for more than a year. And then you look for a W formation. And you can see that right here. Up to you when it comes to investing at that period in time. Then I'm talking about investing, not trading. It's up to you whether you decide to get in on the second peak of the W, because the thing is, it's a risk to do that when investing, because if it breaks, if the move is not proven in the second peak of the W, because it's still essentially within the channel, what you would need, I'm going to move this. What you would need if you were to invest in Link for the long term, you still are waiting for this to be proven, which is a break above the channel, then a higher low. And this here is where you would get involved, as long as, because that is now proven to you that the market structure has changed. And this is how you avoid DCAing into altcoins in a market that you feel like maybe the bear market is over, but it's not, because at this point in time, it could literally do this and go down for another leg. And now you end up in like a 90, another 50%, who knows, 40% drawdown, and you have to come up with more money. Anyway, I've already covered all of this in that video, but for a long-term perspective, Chainlink is, it's doing what it needs to do to be ready for you to invest. And sometimes, like you can, when you start to see this W, you can start to dollar cost average within the range. So that you're not too heavily invested in case you're wrong. But you've got some skin in the game in case you're right. And, at the end of the day, if it comes down and breaks below your bottom line, like just cut it, and, don't hold on down to, I don't know, $3, waiting to be right. That's certainly not the right way to do it. But as far as like a trading trading Chainlink right now, it's already had the massive move. So let's start with the 4-hour time frame on this. And again, all you're doing is zooming out to find the last peak formation, whatever that is. If we're in an uptrend, you're looking for the peak formation that was to the downside. So that's here, right? And then once you see that peak formation, you're trying to see if you can identify a W formation, which we can, which we can see here. You can almost eyeball it. Half the time, you don't even really need to draw it on your charts, but there's a W formation here. So that's where you start your count, basically on the 4-hour time frame. This here broke the 50 EMA with volume here. So all of that would be considered rise 1. This is a horrible rise 2, in my opinion. Like, where's the volume in this? It's not great. So I'm not a fan of this. This will probably retrace fairly deeply. And then it will be a good opportunity. If it does eventually retrace, I mean, ideal retracement is going to be back to this 200 and the 800 EMA. That would be delicious, but you'd have to, we're hoping to be lucky if that happens. That would be a good area to get involved. But on this move here, it's really not all that exciting. So I'd want to see most of that get recovered, maybe stay clear of this vector candle right here. So yeah, literally, if this eventually, and don't forget, being the 4 hour, this could take a month for it to happen. But if we got a really deep retracement like that, that's probably somewhere where I'd look to get involved if I needed to get involved. But I also, as far as just a trade, there's nothing to short on this yet either, because look here, in this move up, there's no stopping volume candle yet on the 4 hour time frame. Let's see if it's there on the 1 hour. And if you want to be a reversal trader, this is literally all you're doing. You're trying to count your rises and your drops. And if you think you have 3, you're looking for a stopping volume candle. So this is a possible stopping volume candle right here, this inverted hammer. And because look, it comes with high volume, so ticks the box. It's a long wick, right? It's after 1, 2, 3 rises, so it ticks all the boxes. I don't like that price returned almost to the whole part of that wick. That's not something I love, but it'll pass for now. In this situation, if it's not the perfect kind of M, which this here might be the M, if it's not the perfect kind of M that I tend to like, then I go the conservative entry. So what I would do on this is I would let this be proven to me that the trend is going to change. And how does it prove itself? It proves itself by breaking the 50 EMA with volume. So if this candle can turn into a magenta or a red candle in the next 33 minutes, or it might be a few candles that follow, but I'm looking for a candle to break that 50 EMA with a nice high volume red or magenta, but ideally red. If it breaks it, let that happen. I'm not trying to jump in on that. I let it break it, let it come back to retest the 50 EMA, show me weakness when it retests that area and creates the lower high. And then this is where I would get involved to short. And you have to be extra conservative. If you want to short right now, you have to be extra conservative because we have such an irrational weekend pump. Where does irrationality come from? Retail traders. So you can't expect them to, you just can't expect logic right now until the market opens and we see what the market maker actually wants to do. Then things start to become a little bit more predictable if you understand this way of trading. So that's personally what I would be doing with Chainlink. I'm not going to look for a long on Chainlink. As far as a futures trade, I would not look for a long unless it had a really deep retracement, but there's a potential setup that is not ready yet, to be very clear, and it may get invalidated if price stays above the 50 EMA, then it's invalidated, okay? So it needs to break before there is even a chance of looking for a short position on Chainlink right now. So what else have I got here in the chat that you guys want to see? Let me just take a quick look. I'm trying to see as many things that pop out to me as possible. I can see so many comments and I probably won't get through them all, guys. But I'll do just one more, but let me see what I can see that is massive. But as long as you understand the process, you can do this exact thing for yourself. So at the end of the day, these things all move together, and you don't really need to see me draw the same crap on 100 charts. Like, they will do the same thing. All right, I can see a lot of people are asking for Phantom. Is that what I'm looking at? Phantom. Okay, let me just draw Phantom. Phantom, where are you? Let me go to, what am I looking for here? Binance. Here we go, this one. All right, so let me just take a big look first to see what, okay, this is decent. Hang on. Okay, so my immediate thought on Phantom is on the daily time frame, I like that this was the low in 2022 and this wick here retested it. And since then, we've created a high low. Okay, so as far as like investing in Phantom, this is the start of ticking the box. Like, it's a half tick yet at this point in time. It's not there yet. But the next thing is it needs to change the actual structure. So you can see all the way to here, even where price is right now, it's still a lower high currently on the daily time frame. So then that lower high is at 0.2163. So for the purpose of investing, you would want to see it break that, come back to retest, ideally the 50 EMA. And then as long as it created a higher low after it broke the level, that could be a good place to invest. So that on that note, excuse me, it's looking okay. On the 4-hour time frame, same thing. I can see a W formation, but this kind of only just passes as a hang on, let me have a look. Yeah, this only just passes as a level 1 rise according to the 4-hour, which is not ideal. And when I say it only just passes, it's because, look, this is the candle here that broke it with volume because it's blue, but it didn't break it with super high volume, and it's blue, not green. So it does pass, but it's, it's kind of a bit iffy. And I don't have, yeah, I had increasing volume moving up, but it's decreasing at this point in time. So 4 hours a bit tricky. Let's have a look at the 1 hour. And 1 hour, we can see the high of the week, excuse me, for last week was at 0.1964. Now this will reset once the market opens at Sunday, 5 p.m. New York. So currently that's where it was. This was the break also at the 800 EMA. Let's assess these and see if we can find some decent rises. I really don't. Look, here's the W formation. Sorry, let me draw it out properly. I see them in my head, but I don't know if you guys are starting to see them now that you're listening to me for a while. If you are, leave me a comment. Let me know if you can. Are you starting to identify these M's and W's on your own? Because this is where it is. It starts with a hammer, right? It starts with a hammer that creates the first peak. We come back, we don't break below it. This creates a second peak. Then the next step is break the 50 EMA volume. We did that. That would qualify this as a rise 1. Through here is probably rise 2. And look, I don't even know if rise 2 has completed yet. This whole thing could be, or this could be the stopping volume candle of rise 3, meaning, let me just draw it out. This is rise 1. This here that broke the high of the week is 2. And this whole move here is 3, and we have this stopping volume candle. So it could be an area to start looking for potential reversal. I would just be very hesitant to short right now whilst the weekend is still in effect. If you happen to get the second side, like if this is going to end up being the first side of an M, and again, this is on anything that you guys are charting now on the 1 hour time frame. If that ends up being the first side of the M, ideally you want the second side to start when the market opens. If that happens, I'd be a little bit more confident that we're reversing. But if it happens before, I'd be a little bit skeptical about that. We really need to see what the real people who move the markets, what they want to do when the market opens. So just a reminder, that is Sunday, 5 p.m. New York. Usually on Sundays, they do make a false move a few hours before the open. So it's important to be watching for that. And usually you can see it on Bitcoin. Now, the final thing I want to say and why I want to just tell you to just be careful is because there is this, excuse me, this rumor going around here that a flood of Ethereum futures exchange traded funds could launch on Monday. I want you to keep in mind this word here starts with a C, right? It's could launch. So I don't believe this has been confirmed yet. There's also talk in this article here about there's a rush to launch them because of the potential government lockdown or whatever. So we don't know if this is going to happen or not, but this is what brings sense to why the market is pumping, why ETH, why followed by Solana, because this is about an Ethereum futures ETF, right? So the thing you have to understand is, like, this could be setting up for something that is not, I don't want to say catastrophic because I hate to be like dramatic, but it may not go the way we expect, because at the end of the day, know that it's futures. That means that they can short. And so if they're pumping into the weekend, getting you to FOMO into buying things, then they're not going to buy at high prices. They're not going to be like, oh, look at all these cute retail who like bought this thing at $10 and now it's 20. Like, we'll buy it. No, they're going to bring it right back down. They're going to get you to experience pain, and then they're going to get involved the other way. So know that this is a futures ETF. They have the power to short it, and be very, very careful. And that's why I'm telling you to look out for potential signs of reversals, because there is no guarantee after this weekend price action that a reversal is only going to be a pullback. If it is, great, best case scenario, but let's be on our toes. Let's not be emotional about it and think that the bull market's back and we're going into, I don't know, whatever, 100 grand Bitcoin. Like, let's wait for those pullbacks. A pullback is going to prove to you, if it creates a higher low, that we now have a new bullish trend. If it doesn't create the higher low, then this was a fake move on the weekend for this specific purpose of getting us to go long, so that when the market opens and when this happens, they can open their short positions. Absolutely 100% be on your toes tomorrow. And if you are in amazing trades, take some profit. Number one, take some profit. And number two, move your stop loss into profit if it allows you to do that with your risk to reward, just to protect the good work that you've done over the weekend. All right, guys, that's all I have for you today. I will see you guys on the next video. Enjoy your weekend and be careful of this price action.